Saving money keeps you in poverty. This statement is a reality acknowledged by all financial experts in 2026. Do you know why? Cash is rotting in your hands. Inflation is eroding your purchasing power every single day. In 2026, leaving money in the bank is like creating a hole in a boat you are sitting in. It will sink while you watch. But there is exciting news. In this volatile economy, the money thief, inflation, actually makes certain assets grow even more for you. Today, I will tell you about 3 assets that are 10 times better than the money sitting in your bank. In this video, when we discuss the second asset, we will talk about the wealth secret, the wealth gap, that everyone can buy but many don't know about. Stay tuned until the end, because at the conclusion, I will reveal the 2026 strategy on how to build your portfolio with these assets. First, if you are new to this channel, become part of our family by subscribing. Cash is trash. Cash is not an asset. It is a liability, a burden. Purchasing power erosion. Putting money in the bank is a mistake in asset allocation. The printing trap. When governments print extra money, the cash in your hand loses its value. Negative real yield. This means if the bank pays you 5% interest but inflation is at 7%, you are actually losing 2% of your wealth every year. Asset number 1. Real-world assets, RWA, land and houses. The first is an asset that is visible to the eye and tangible to the hand. Hard asset protection. Additional land cannot be created. As the population grows, the value of land will inevitably rise. In 2026, you don't need millions to buy a house. You can use fractional ownership. Your money brings you passive income. Since rent increases along with inflation, your asset is always protected for you. Asset number 2, Bitcoin, digital gold. This is the wealth secret I mentioned. Fixed supply. There are only 21 million Bitcoins. The government cannot print more. Asymmetric risk. This means your potential loss is small, limited to what you put in. But the potential gain is limitless. Institutional adoption. In 2026, major banks are holding Bitcoin as a reserve asset. This provides market security for you. Asset number 3. Stocks, value companies. The third is shares in large companies that produce goods and services people cannot live without. Pricing power. Companies like Apple, Google, or energy companies. If the cost of goods rises, they increase their prices. Their profit increases for you. Before we continue, don't forget to subscribe to this channel and like this video. Compounding. Earning interest on interest, compounding interest, is the 8th wonder of the world. Strategy. Use index funds, VOO, QQQ, to expand your wealth internationally. The 2026 Wealth Plan. The decision is in your hands. You can let your money remain trash or turn it into these 3 wealth machines. Step 1. Audit the cash you have on hand. Step 2. Follow the 70-20-10 strategy, 70%. Assets, 20% liquidity, 10% high growth. Step 3. Invest in your financial knowledge. Which of these 3 assets do you prefer? Write it for me in the comments. Don't forget to subscribe. Remember, the best time to plant a tree was 20 years ago. The second best time is now. Why keep a little bit of cash on hand? In financial literacy, it is mandatory to know the difference between liquidity, immediate money, and solvency, total wealth. Opportunity cost. Leaving all your money in the bank carries a huge opportunity cost. That money should have been a worker multiplying for you, but instead, it is sleeping in the bank. The emergency fund. The rule for the wealthy is keep only 6 months' worth of expenses in the bank. Everything else must go into the market as a worker asset. In 2026, money that doesn't move is dead money. I am about to tell you something amazing. If you haven't subscribed yet, subscribe right now to become part of the Money Mindset family. The inflation hedge. Why are these three assets chosen? Because they act as a hedge, a shield. Intrinsic value. Land or shares in a large company have intrinsic value. Cash, however, is just paper printed based on government trust. The debt advantage. This is a secret of the wealthy. When inflation arrives, the value of your assets increases, but the value of the debt you took to buy a house decreases. You hold a high-value asset, but you pay back the debt with devalued money. This is called wealth transfer. Psychology of asset ownership. Moving from cash to assets involves fear. Their value is volatile. It fluctuates. Long-term horizon. Don't buy an asset thinking you will sell it tomorrow. Ask what will happen in 5 to 10 years. Wealth mindset. The poor think, how can I save money? The wealthy think, how can I buy assets? Their difference isn't just the money they have, but the assets they own. Just watching this video won't bring you wealth. The actions you take will change your life. Today, pick one of these three assets and continue your research. If you want to know how to earn money from rent without actually buying Bitcoin, I have a previous video made about Bitcoin. Go and watch it. If you want a full course on how to earn money online and YouTube automation, subscribe and become part of our family. Thank you.